And the Titans, they're like, wow, like everywhere I look, everything's expensive, everything's big. And they go, right, I need a new plaything. Let's create a bull market somewhere. And someone goes, Bitcoin? Genius. Okay, let's do ETFs, right? Do you know what the next thing they're going to do?
Welcome back to another pod. Today I have the privilege, and it is a privilege, of chatting with someone who has spent his career navigating and often thriving through some of the most volatile market conditions. By the age of 21, Hugh Hendry was a financial analyst, and just a few years later, he was managing capital at scale most can only dream of. Hugh went on to build an impressive reputation as the founder of Eclectica Asset Management, a hedge fund that didn't just survive the chaos of 2008, it excelled, delivering a remarkable, I think it was about a 30+% return when essentially all else in the capital markets was burning. But what I think truly sets Hugh apart isn't just his numbers and his performance, it's his mindset. He's a contrarian thinker who routinely challenges the status quo in the world of finance, whether it's, his sharp takes on macroeconomic policy. He's got colorful commentary for sure on the financial world, and he's got an uncanny ability to spot what's coming down the pipe long before us mere mortals. So Hugh, to me, embodies what it means to be a global macro thinker, which is what we all strive for here at Pinnacle. So that's why I'm excited to have him on. Hugh, welcome.
My goodness, I'm humbled. I don't know. I'm humbled. I am nothing but a punk rock macro strategist.
Love it, man. Love it. So let's jump right into it. We have a penchant to focus on natural resources and commodities. I'm a believer that the long term is inflationary. Currency debasement is the only way out, at least in the Western world. Now, you've built much of your career thriving on contrarian views, 2008 being a prime example. Today, I think the chaos and uncertainty in the markets stems from almost completely from monetary policy, with central banks trying to thread a needle between controlling inflation and providing market stability. Do you think, it feels like it to me, but do you think the central bankers have lost control? And if so, what's coming next for investors? What should they be expecting?
Central banks losing control? Question. When were they ever in control? I would say that the environment of the last 50 years, so including the 1970s, is an environment where the tide has gone out on the purview and the power of not only the Central Reserve of America, but globally. And I think that speaks to the emergence, because if I say 50 years, that takes us back to the closing of the gold window. And I think about roughly coincidental to that, we morphed into Bretton Woods 2.0, which is really the offshore, unregulated and largely enigma-like euro-dollar system. And in the last 50 years, we have replaced the high-powered money that was gold during the gold standard. And if you think of an upside-down triangle, gold was at the bottom, the purest, the most solid foundation, which would then underwrite different strands and agency of monetary transmission. And over the last 50 years, we held it up and we slid out the little apex of gold, and that's been replaced by US treasuries. And I know that more dollar credit is created, the monetary inflation that I guess is at the center of, you told me you were prejudicial. You're prejudicial in that you don't trust money and you believe in the inevitability of inflation. Now, one can't say the inevitability of inflation because it is always with us. So I guess the inevitability of unanchored and very
Right.
rapid rates of inflation
Yeah.
that we would think of in the 1970s. And so I'm saying to you that the power of the central bank has waned. The Fed is one thing that we know with certainty. It is the regulator of the domestic US banking sector. But in terms of the generation of dollar credit, the onshore American banking sector has become a very modest contributor or creator of dollar credit. And its role has been taken offshore and unregulated. And we have to dare to suggest that either the Fed just has no energy to go. It's saying, well, M2 was hard. And now I've got this matrix offshore in like 1,000 banks, and they don't speak English. And let's pretend it's not there. So let's take on your prejudice. So first of all, you're doing something right. You are committing to equities. I wonder if you're committing to commodity futures, because I wouldn't say that is correct.
I'm not. I'm solely equities. When I say commodities, either the hard assets themselves, gold, silver, but the equities would be like the miners, nat gas producers, oil and gas producers, and so forth, right? So that is a key way that I personally, play the inflation, play the inflation game, I guess you could say.
Well,
but I also jump into the casino too. If I'm being frank, I jump into the casino because I believe we're in a pretty epic liquidity cycle. So it's hard not to put your money into, at least for me, it's hard not to put some capital into, the fan favorites, the QQQs, the SPYs, and so forth, right? I just feel like if they're going to continue to debase, you need to be in a spectrum of assets that can rise with that, frankly, poor monetary policy, a reckless monetary policy. I'm not this, professor of investing, but I do believe that you have to get into the casino, and you can't avoid things like the S&P 500. I know you might disagree, but anyway, that's my rant.
I think it's funny that you are prepared to leave the asylum of gold and junior mining and silver stocks to enter the casino.
Well, that's a good point. Actually, that's a good point. That very, very astute observation. It's all a casino, you could say, I suppose, especially the junior mining and the mining world and anything commodity related, any producers or explorers. It's a massive gamble.
So again, let's see if I can vibe positively with you. I launched an agricultural equity fund back in, I want to say 2006. And at one point, it was the biggest agricultural equity fund in the world, about $650 million. But at the time, I had to choose between equity and commodities, agricultural commodities. And it's an easy decision. So your mining stocks and the casino stocks, they give you a risk premium. They actually pay you for your participation, which pretty much you don't get. I mean, natural gas as a futures contract is a confiscation of wealth, because you're actually paying the forward shape means that if nothing changes, you're making, it's like the most expensive VIP gentleman's club in the world. I mean, like, it's just not worth it. So that's positive vibing with you, but your mining stocks have failed the considerable test of time. They just haven't. So we've had ever-present inflation, modest, and at the margin it declined until the pandemic, and the future's up for grabs. Okay, but I mean, I could cite 50 years of data. They've done nothing.
Yeah.
So why are you so forgiving? It seems like it's like, oh, but the next time you're going to treat me better, Why is
I think coming from where I come from, which is Vancouver, British Columbia in Canada, it's a very left-leaning province now, but there's a very ingrained in the culture is a very entrepreneurial, hard money, wildcatting perspective. And there's been many success stories out of there. So it's ingrained in me since I got into the business, very early 20s, that you need to invest in commodities. And I've had you could say some pretty good success in the industry, not without some very painful failures. But I guess it's just ingrained in me that don't believe in any fiat over the long term. Now, when it comes to mining stocks, they are horrible allocators of capital historically, at least in the last 20 years. They've gone through a period of terrible acquisitions, and it hasn't borne any fruit for many of these large miners. I won't name names, and the cost of production has gone up tremendously. So it is a tough business, and I see your point. Now, the point about the casino, valid. I just meant when you participate in the S&P, it's kind of like everybody's going to the same table and everybody's putting their money down on whatever it is, right? Whatever the reasoning being. But I attribute why I put money into things like the S&P and index funds and NASDAQ and so forth is because I think we are in the midst of a epic liquidity cycle. And I think they're just going to keep fanning the flames. And when I say they, I mean central banks, which trickles down into the economy, equities, and so forth.
Okay, so we're in disagreement. Okay, hotshot. Tell me about the liquidity. Liquidity is the most bunkum. I'm going to beat you up here, so be careful how you answer.
I like it. So liquidity, what do I mean by that?
Yeah. Where does it come from?
Cheap money. So
okay, what is
negative real interest rates? For example,
very
quantitative easing, low interest rates, easy access to capital.
Presently, real interest rates have never been higher, almost ever.
But I'm saying, take the last 15 years, since the great financial crisis. So after 2008.
There were 4 years between 14 and 18, perhaps, where you got to about -2 negative real rates.
Okay.
And now we are lodged firmly above 3 positive.
What I can say as a counter to that is, what was the real rate of inflation? Now, this is obviously a highly debated.
You don't want to go there.
Stat.
The understated inflation.
I don't. I love it though, but I look at inflation and I don't think I mean I look at inflation and I live my everyday life aside from business and so forth, just everyday life. I'm told inflation is 2 or 3 or 2.5%, 3.5%, somewhere in that range right now. I'm not seeing it. I'm seeing, round numbers here, but I'm seeing it's probably like 6 to 8%. And I think 2 years ago it was probably about 15, 20%. But they were reporting a lot less, right? So I guess that's part of my argument about cheap money. Please.
So we have that data stain which pervades the last 50 years. Yeah, real rates are high, and inflation on every measure is trending lower. Now, we had a pandemic. There was a moment we thought we were all going to die. The world was over.
Right.
And we had the decline we had in GDP stats, first quarter, second quarter of 2020, where, we've had famine, the city of London burnt down, but, we've never seen that. And so politics aside, individual liberty, the buggers, but that aside, we got the best case outcome. Cracked the virus thing, and the U.S. economy has rebounded with vigor. Yeah, but it doesn't come cheap, and the legacy of that, so you spend trillions upon trillions, but you achieve a good outcome. Humanity is saved, and the cost of it is 2 particularly odious years of price inflation. And officially, and with the stain of error, like about 9.5% rate of change, and just about every metric now is trending to 2. Okay, kind of like we had a pandemic, we saved the world. We had like 2 really bad, 2 kind of not so good years of inflation. We're moving on, and the economy seems Teflon-like. We should be getting a recession, and we're not. Asset prices are seeing wealth everywhere. Again, what is it with you mining guys? I think you need sunshine. You're like mold. You spend too much time on the ground.
Listen, I'm in Calgary. It's snowing today. I need some sun. I need whatever you've got, man. You're living the good life. St. Barts. I mean, come on. It's an optimistic way of thinking. I getting that vitamin D, I suspect.
But I tell you, it's a life without prejudice. I major on this. There are about three principal factors in underperformance and not making the money you should, and one of them is prejudice. It's everywhere. I've been very conscious of it very, very early on. When I was responsible. If we go back 12 years ago, 12, 13, 14 years ago, I had max funds under management, assets, $1.5 billion, big, huge agricultural equity fund, and a macro fund, hedge fund, and various satellites. And I took no calls from investment banks. Had nobody, hey, you want some hedge? Nah. I didn't read research. I didn't really spend a lot of time in the office. I listened to music and I looked at charts, kind of like one of those crazy characters from Big Short. I mean, I am one of those characters. I knew them all. Greg Lippmann, the Deutsche trader, Deutsche just wouldn't tolerate him in the London office, and so Greg spent 5 weeks, like in my place in Bayswater. Anyway, just looking at charts and music and seeing patterns and then trying to associate the patterns and then being curious. So being playful and curious with the patterns, conceiving of my narrative. So if you will, I was the architect of all of my success and very much all of my failures, of which there were many. Yeah. Newspapers. I read The Guardian. I don't know if I read it. I read the sports. I read the soccer pages. Okay.
Right.
But I choose that because it is so preposterously woke and it's so prejudicial. It doesn't think so, but I don't share its prejudice. And I try not to be prejudicial. But my go-to place is where it's just so obvious because prejudice is the number one, number two killer of performance. There's prejudice in the financial press, but the greater problem with the financial press is not prejudice, it's ignorance. It's a low skill set. I mean, with the advent of the internet 25 years ago, we essentially destroyed the profitability of that form of medium, and therefore it can't sustain. I mean, it's rational. There's no reward to sustain the alpha that would come from mindful participants. So the information is elsewhere. So you are in the grips of prejudice, but prejudice is it's the frog in the jacuzzi. It's like, oh, it's really nice in here, and then you're dead. Your frog's legs.
Having said that, if you look at commodity values over the last 100 years, they've been a nice play. And let's go even more narrow, the last 20 years. They provide a nice counterbalance to fiats, which inevitably are losing their value. Let's call it since 1972, whenever it was that Nixon went off the gold standard. They have provided a nice counterbalance to currency that's losing its purchasing power.
Who's done this? Who's done this miraculous feat?
Commodities.
Commodities.
Oil.
So remember, like commodities, you wouldn't capture that as an investor because of the curve. Commodity equities, liar, pants on fire. They've been atrociously bad. Yeah. So again, I'm still not sure what you're talking about.
Okay, so let's go with gold. Okay,
let's do gold.
Because it's kind of the poster child. You look at its performance over the last 20 years, which has been, almost in lockstep with the U.S. government not having a surplus, right? It's been about 23 years. So as they've created bad fiscal policy, the central bank has had to accommodate that, I guess you could say, with their monetary policy. During that process, gold has averaged, 9.5% compounded annual growth rate over the last 20 years. Does that not lend some sort of credibility to my argument that commodities are good to counter the inflationary risks? Or if I'm an inflationary believer, a long-term inflationary believer, does that not sort of point to some sort of edification?
Let me tell you what I was doing 23 years ago. Where are we? 21 years ago. I was buying gold, bought a lot of gold, and I
21
bought
years ago?
21. So what's 21 years
Epic
ago?
timing. Epic timing.
Hey, listen, I don't live in St. Barts for no reason. I'm not sitting here for no reason.
Yeah.
I mean, I was a punk. It was the first calendar year of my hedge fund. My hedge fund was, this is 23 years ago, so it was 50 million bucks. And the UK Exchequer, the Treasury Minister was selling gold, sold half of their reserves to just under 300 bucks. They had held gold through feast, famine, not revolution, but French Revolution, a civil war in England, whatever. But they sold it. They sold it. So imagine, is that 200-300 years of economic history? And they're like, oh, hodlers,
Yeah.
So what was it about? What was it about 23 years ago that made it impossible to own gold? I think it was two things. It was the conceit of a well-formed argument, and it was the intolerable pain of owning a bear market because gold had languished. It had peaked at over 800 bucks in January 1980. So
Exactly.
1980, we're talking 23 years. It was 23 years ago, but 23 years prior to that, they sat and they watched the S&P go up 10 times, and they had their gold reserve, and it fell by 60%, and they went, I'm out of here. I was buying it. Let me give you the positive validation. Gold is a $20 trillion asset class. So you are me, a very, very charming, but a mere flea on the horse's ass kind of thing, yeah? So gold, the principal function that gold is there to serve is one of diversification in portfolios. We have this permanent portfolio structure, 4 quadrants, with risk premium, as we discussed at the beginning. You always want to be long something with risk premium, yeah? So I said to you, number 1 and number 2 causes of failure, investment failure, like underperformance, like not maximizing your returns, is being infected by prejudice. And number 2 is, which is arguably the same thing, is bearishness. I'm actually, I get a no, again, media and prejudice. They actually transport their bias to you, and so you could say anything. But I'm down as a Permabear.
You do come off, I think at first glance, often Permabear, but sorry to interrupt.
No.
This is something I wanted to bring up. You have talked about, and I know you believe we're going into a deflationary cycle. Okay, I get that. But you've also talked about in past interviews, you think we're embarking on a 5-year period of epic opportunity. Explain that. How does that work?
I think we got to introduce past tense to these comments because in terms of 5 years, so again, this is profoundly important. We kind of all stumble through life in a coma. You know that famous psychological test about the dangers of attentiveness. Like we're chained to our desk, we're watching things, prices moving, and there's that famous video, a student psychology experiment, where there's like 6 kids, 3 in blue bibs, 3 in white bibs, playing basketball. And they're playing in a strange location. They're playing it in an office reception area where the elevators open up. Yeah. And so you might be like, well, that's a bit odd, but you're saying, well, they don't have much of a budget. They couldn't afford to go to the stadium, whatever. And the challenge is to count the number of times the blue bibs, the blue team, how many passes of the ball they complete. And so you're like, okay, forgive me. You're like, okay, 16. And he goes, anything else? Anything you want to talk about? And I'm like, oh, I could swear it was 16, 15 maybe, but I'm sure it's 16. And then it rewinds it, and there's a guy wearing a gorilla outfit, and he comes out of the elevator and he goes, whoa! And you don't see it because of your attentiveness. You've been given a task and you stick rigidly and you don't see there. So the moniker of the bear is one of, we've been in and again, the past tense that I'm suggesting. We have, first of all, the natural course of risk premia assets is to ascend. You would argue aided and abetted by the grease of inflation. I don't agree with that. But, oh boy, the last 5 years are interstellar in terms of returns. Last 5 years.
No, I thought an interview that I saw, it was within the last couple of months of you saying this. Maybe call it 3 to 6 months.
Saying what? Oh, 5
that
years.
You think the next 5 years are going to be quite opportunistic.
Yes.
For investors.
You know, what's the number one complaint about guys? You know, it's like they talk about themselves.
There's a few.
They talk about themselves.
right.
I was talking about the 5-year opportunities for me. I'm very bullish on
I see. Oh, so you're talking about women and what? Good eating or what? Good sun?
Good living, but living for someone who's out there on the perpendicular, right? So I'm a global macro strategist, like a real one that managed money, one that has a demonstrable record, one that's very, very smart. Not like 99% of the jokers who are on all of these shows. Forgive me. Okay.
No.
You know,
agreed. That's why
I'm asking
I was
the
so
viewers
excited
to
to
forgive
chat.
me because I read the comments like, what an arrogant SOB. I'm like, I'm sorry, right?
Nah,
Like,
it's good.
go and be mediocre elsewhere, right? I am a provocateur. There's nothing provocative talking about, you know, this central tendency to rise.
Right.
The Dredge. There's a wonderful proponent of tail risk, very much like Mark's, what's it called, Spitznelli or whatever, out of Miami. The challenge is not to, again, we do sports metaphors, not to go round the track at 60% of your max speed because you fear you may come off and damage the vehicle. The challenge, if you're in it to win it, you know, as us, is to go bloody fast, all right? Now, how do you maximize your speed? You know, maximize your speed by having the best brakes, right? So I'm a brake guy. So if the market's just like, everyone falls in love with it, Nvidia, Tesla, right?
Right.
And so you need someone out here either side. I call that the perpendicular, who's just provoking. I'm like, you sure? Because like you pick up a lot of prejudice, and I try and substantiate things that might happen. You know, we talked about I made 50% in the month of 2008, October 2008. Very much the worst calendar month in 100 years. I made 50%. But the riposte of every great investor who lost money was, you can't predict that stuff. I can't predict all of it. But I'm a provocateur I'm just like going to the gym, right? I'm just trying to make the muscle memory just a little bit firmer, a little bit more aggressive. That's right. So we just have to go back to that the preceding 5 years. So the S&P did fall in what 2022 fell 18%, but it's up 27%.
That's a bad year.
Last year it was up did it have a 3 handle? 17% compound.
I think it did.
You know, so $1 million is becoming 3 million almost every 5 years. That again, that's a fact, but it's a provocative fact because so you then go, okay, so how often does this happen? Let's try and quantify these things. And it turns out the only comparable period, now it's a better period, but comparable, is the period the calendar year starting 1995 and concluding 1999. The S&P had 5 consecutive 20% up years, right? The next 3 years, you know what happened? Like stocks got massacred. So again, the nearness of time tames and forms prejudice and lowers risk control. And I get the greatest amount of hate like at this point because I'm provocative. I'm like, you're like, shut up, go away, shut up. So
I appreciate your perspective tremendously. So there's a couple more things I just want to touch on. And it actually is a good segue. So you've, often spoken about the importance of embracing, paradox and uncertainty in investing. And these days, narrative seems to dominate the market. AI hype, deglobalization, will the Fed pivot, blah, 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 right? How do you, when you're managing money or investing on your own or whatever it may be, how do you separate these days real signals from just noise?
I was going to say something prejudicial there. It feels like we're in an environment of very high noise to signal, but I can't substantiate that. But what I was meaning was, in attempting to answer your question, I was going to put great store in price action around the Federal Reserve's meetings. I had a lot of attention on the second, so they cut rates September 17th.
Yeah.
And so I was fascinated about where stocks would be as we approach the second meeting. But in the same week, we get the election and the election result.
Oh, yeah, I see.
And so I can't call it noise because it was market reaction. But I am of the view, the biggest question, I think it's a huge question for your community, is how long can the US remain an island detached from, because you were saying, my view is like we may re-enter a deflationary cycle. That's not my view. My view is I don't believe we have yet to exit the structural deflation of the last 20 years. And so the question is, how long can the US...
Sorry for misquoting you.
No, these are good because it's that's how we learn. Just it shows I'm listening. You've got sovereign bond yields 10 years at kind of pegged at 2 and showing a lot of willingness to try and go lower across the rest of the world, barring the US. US rates 10-year 4.6. Very different domestic situation just now. But over the summer, we had a 160 basis point decline in the 10-year Treasury. And actually, it came across all the tenors. Everything fell in parallel. That's big. Yeah, we went from 5 and we came down to 3.4. I think that prompted the Federal Reserve to cut, and to cut in the manner that the 50 basis points, to bring on consternation by smart people, because there are only 2 precedents, and they're not successful precedents, of where the Federal Reserve seemed to subjugate the domestic economy, to almost throw a dog a bone to the international community and loosen monetary conditions despite the robustness of the domestic condition.
Yes.
And that's like 1927. Bad things happen. I mean, good things immediately and then bad. And 1998, same thing. We ended up in that catastrophe of the year 2000. To give credence to my view, so my view is that they're doing it to stop the importation of the kind of sovereign crisis from elsewhere. And the sovereign deflation of elsewhere is, again, we vibed about pandemics at the beginning. It's a global deflationary pandemic, and it spreads. It's very viral, and it's viral through the transmission of international capital. If you're getting like less than 2% on German bonds and there's no liquidity, but you can get like 7.2 gross on a US mortgage, there's money movement. And we're beginning to see elements of that, of course, in the dollar, which has gone 7 big points straight up. Yeah. So, we've got to be mindful of things. That's how my mind works. Why has gold fallen? Gold's just... now I'm interviewing you. Wow, it's cool.
Yeah, why is it fallen? Strength of the dollar.
Yeah, really?
You're talking about in the last since Trump was elected, right?
Yeah. I mean, it's really had it's had a doing. It's really been beaten
up. But how about the run it had from October to October, right? That was an epic run. So strength of the dollar, the belief that Trump is anti-inflationary. there's a strong US dollar. So of course we're going to see a retraction in gold. I don't necessarily agree with that.
Why is it not reflected in Bobby Digital?
In Bitcoin?
Yeah.
I don't think Bitcoin. I own Bitcoin, so I'm not against it.
Yep.
But I don't think Bitcoin is a hedge against inflation. I don't think it. I think it's a speculative asset that has tremendous. One second. That has tremendous potential to be a household technology in the future. It's also a hedge against systemic collapse.
You can't cite gold and the dollar to have much credibility. Dollar's been pretty much the same level since 2010, about 100 on the Dixie.
No.
Yeah, good check.
When Obama was there, it hit like the 80. I think it was 80 in 2011, wasn't it?
It rebounded.
It did, yeah, it did rebound, but it took a dip.
80, forgive me, it hit 80 with the the Lehmans, with the GFC, and then boom, it went to 120, and then it came down. It gyrated, but if you look at the last 12, 13 years, it's been either side of 100. Yeah, give it.
That's been
the predominance of its trading, and gold's tripled. So. It doesn't seem to be a dominant variable. I was going to say to you like early, and I didn't finish my thought. The attraction of gold to big allocators is the diversifying factors. So in the 1970s, equities, if you're listening, equities, they don't always go up. I mean, they always go up, but the compound annual growth rate was like 1.7% from 1969 to 1982. And there was a lot of inflation back then, so your real rate was negative. But a diversified portfolio that had stocks, bonds, alternatives, and cash. Well, cash, you got a big risk premium. Bonds, you got premium, but you got wiped out on capital. And equities, they were just flat. And the genius was the fund that had an allocation to gold, which went from $30, $35 to 800, right? So very, very distinct. And you're like, so when you're assured of things that kind of go like that, and you're creating a portfolio, that's a useful tool. We saw it again in the next period. Now, the next period was the opposite. Equities, boom, went up tenfold. And gold, we discussed, fell from 800 to $300. The profound bore about gold just now is it's lost its reason in terms of not the people running around going, Zimbabwe and Weimar.
Not people like me.
The big whales are like, what is it? So your predominant risk, if you're a multi-billion-dollar financial institution, is you got too much in the S&P. And again, what I'm saying to you is the best managers, they absolutely have to drive at top speed. They got to be fully invested. So they need breaks. And gold, it should be a great break, but it's really a very poor break because, and you alluded to this in what you said earlier, especially from the lows of the GFC, gold and S&P there have been months when they've separated, maybe 18 months, but they've been identical. So that's actually a break in the historical trading pattern of gold vis-a-vis the S&P. And it just, I'm like, gives me pause for reflection.
There was also a break in how there was also a change in monetary policy after the GFC, right? Nope. Things like quantitative easing. When have we had that before?
So
buying assets, the central bank at that kind of a scale. Doesn't that gold's been a currency for thousands of years? If people see the money printers doing things that are unprecedentedly, they have no precedent, so they get scared. So they say, where can I put my money outside of, let's call it risky equities? How do I take my money from this crazy currency where the puppeteers are doing some wild stuff that's never been seen before? I want to put it into another currency that's safer. And so I think that's the argument for gold. It has the track record that no other currency has ever been able to match.
But
It's been around longer than any currency, and it will continue to be around. I think that is the argument, right? But to your point about prejudice, there's no prejudice there. It's been thousands of years. People have been using this as a store of value at a minimum, but it is a monetary asset.
Well, okay, so
for sure.
Okay. I mean, you're just picking up the prejudice of the community. So we can say easy points, right? So, the dollar is not the competition for gold, because if I've got dollars and I've got fiat risk, I'm going to lose 2% of my value over time.
Right.
And like 2% is. Do you know what? I'm going
to lose 99% though over 50 years.
Well, that's completely made up, and I'll tell you why it's made up. But a burn rate of 2%, I think, is absolutely merited if 2% is like a lubricant that keeps a democracy robust and it keeps you loving your neighbor. Yeah,
fair point.
I think the problem in our world, in our democracies, is that we actually we've had the wrong inflation, because we've had inflation. It's just not the inflation that you and your buddies always go on about. We've had profound and grotesque asset price inflation, and we've had deflation in the labor pool. And the election of Trump is simply, with deflation in the labor pool, the cost of immunizing lots of rich people, keeping them alive during a pandemic, meant that your grocery bill went up. But you're being asked, so like the 75-80% of the population, right, is being asked, that has nothing, that is the downtrodden, is being asked to underwrite the really, really rich people. Go back to Hank Paulson, and you got to save the financial system, and it's the Treasury. Who's the Treasury? It's like the 75% of people who have been destroyed the last 40 years. Yeah. You're saying to them, hey, buddy, I know it's not been good. I know we closed the steel foundry, but I got to borrow a bit of your money to bail out these friggin' jokers who just made another mess of it, right? So you always get, this is why you get Trump. And I don't think that's the solution. It's protest. Give me someone who's going to take care of me. I'll take care of you. You know what I would do? Do you know how I would eliminate how you bring back the common man? You don't have a tariff on trade. You have a tariff on capital. Capital is the virus, is the financial virus, which sends asset prices, almost all asset prices, apart from gold and silver miners, but all asset prices, even the gold price and the Bitcoin price, is everything higher. But you sit there with a penury for your existence if you're an unskilled labor component of our democracy. What I was saying to you, the S&P is the competition to gold. It's not the dollar, right? So there is a slide, there's an inflationary slide, and arguably we should have more of an inflationary, or we should, like I say, we want to have less asset price inflation and more wage price inflation. There's actually very little data that suggests wage price inflation is a cause of price inflation. Kind of like, I mean, I'm being a bit cute there, but the moments where we had very high wage price inflation was where the economy, where you were coming from a very, very low share of labor to GDP, and it was mean reverting, and it was not demonstrable that it was actually inflationary. But my point to you is, gold is in competition with vintage cars, wine, the S&P, credit, like risk, and gold and especially silver. Gold's been okay. Gold's been okay. Mining stocks have been dreadful. They've been dreadful.
Not going to argue with that. You should not own. But the underlying commodities, I don't know.
I'm saying to you,
the last 20 years,
think gold has been respectable. Yeah, more than respectable.
Certainly,
silver's been silver has been appalling. Silver has been appalling. You have no credibility if you're a silver bull. I mean, yes, there's a narrative with the increasing
Supply and demand.
the demand thing where you could go from being a precious metal plus the optionality of the industrial demand, but
Industrial, yeah, exactly.
Okay.
It hasn't paid. It hasn't paid. I agree with you on that.
Yeah,
Silver
but it's a
hasn't paid.
fallacious argument to say you need gold because the dollar's going to go down. Well, actually, that is a phrase within a longer sentence, and the longer sentence is actually we've got a lot of protection. I can put my money in. I can buy a house. I can buy a commercial property. So many things I can do, and they've pretty much all washed out very, very well.
Yeah, I agree with the land, real estate. I agree with that too. It kind of plays into the hard asset argument of gold, for sure. But you are coming off very bearish, quite bearish. So let's talk about young people for a second. They got some extra cash. Let's say they're millennials. They want to generate wealth somewhere or another, and they want to put it into some sort of an investment. Let's say they can buy one asset class today. And obviously this is, speculative, but what do you think would be that one investment that people should invest in asset class wise? Bitcoin?
Yeah, Bitcoin. Bitcoin ETF.
Why?
Oh, very simple, because we are engaged. I mean, you focus with your prejudice on a particular tiny part of the overall market, but it's a market. We are intrigued, and we're talking macro. We're intrigued about essentially thrusters. We're looking about the discharge of energy within the financial community. The energy being credit, and credit is like a propulsion which carries heavenly bodies into the sky. Yeah, stocks, gold, oil, silver, etc. Property. And we're at one of those rare moments. And of course we're at one of those rare moments because we just said the last 5-year returns are kind of like either the best or the second best in 120 years of data, right? And all I'm saying is the quantum, the mass, rather than trying to take all this credit energy and discharge it into a projectile, and the projectile being like a bullet. Today it's a cannonball. Like the mass is so damn great, right? And, in physics, if you look at Newtonian law and stuff, it gets harder and harder, right? So the number one dumbass reason for me for Bitcoin is it is first and foremost a trending asset class, and it doesn't have the longevity. I can't dance like an Egyptian like I can with gold. I can say I've seen things, but I've got
that was good.
I've got a robust data set, okay, and it's trending higher, and I think enough time has expired whereby you can say it is an asset class. It is an asset class that lives within the alternative space, and it's the smallest of any asset class in the world. It's
like a market cap wise.
Market caps is $1 trillion.
Yeah.
Right. So compare the $1 trillion of Bitcoin to the $20 trillion of gold. So it's 1/20th. So it's not that you need 1/20th of the energy, like to move it, but it's not far away. So example, do you think you'll see gold trading at $7,000 in the next 5 to 10 years? What probability do you associate with that?
7,000 in the next 5, I would say
it's trading
25%.
25%.
25%.
So for me, I attribute 25 basis points to that chance. A hundredth less than you, whatever. Because, and again, I guess it would be another question. Can you conceive of gold having the same market worth as the US equity market?
Geez, I doubt it.
There you go. So it's 7,000. It would be a $50+ trillion massive valuation. Okay. And that's where the totality of US equities, and the totality again is gold doesn't have a risk premium. You have a modest risk premium today, but you get close to 2%, which is your long-term inflation thing. I can't. So gold at 20 trillion. First of all, it just hasn't demonstrated an inverse correlation to my other risk assets. And so like, honey, call me back later. You don't really do much for me just now. And then when she calls me back, so this sounds misogynistic.
Go on.
Well, she's on a bit of weight, you know. She's $20 trillion heavy, and I'm like, if you get any younger and skinnier friends, go, oh my god, I'm gonna get killed by this.
I shouldn't be laughing, but I understand the metaphor.
Bitcoin is the skinny hottie, you know. Oh, and then add the fact that we will be conditioned by social media and by any media, and the people who control media are the titans of Wall Street. You know, it's if we go back to the Yellow Brick Road and Dorothy and whatever, you know, the lion depicts William Jennings Bryan, the amazing orator, the populist who ran twice for US the president, and he was defeated, and he was defeated by the titans of Wall Street. Money wins, baby. Okay, and the titans, they're like, wow, you know, like. Everywhere I look, everything's expensive. Everything's big. Everything's big. And they go, right, I need a new plaything. Okay. Let's create a bull market somewhere. And someone goes, Bitcoin? Genius. Okay, let's do ETFs, right? Do you know what the next thing they're gonna do? I mean, this is public fact. They will introduce a listed options market. A listed options market.
I think it's a done deal, isn't it?
It's a done deal. We just don't know when. When. And at that point, the best trade ever will be shorting Sailor's ridiculous Bitcoin. Bitcoin is the only global asset class that I could imagine could triple in like 3 years, less. And it wouldn't change the financial universe. There would still be enough oxygen to comprehend the world.
Right.
Whereas if gold were to triple, I mean, I can't conceive of that world where gold triples and trades 9,000. It can only trade there with profound and cascading consequences for every other part of the matrix that we embody.
I think that's a great spot to wrap it up, Hugh. Where can our viewers find you online and get more of your excellent and contrarian commentary?
Thank you. So my shop window is Twitter, Hendry_Hugh. And again, follow the name Hugh Hendry. But I'm looking for people on Patreon and Substacks. Great, it's a great platform. I'm like $20 a month, and you and I can become buddies. I just don't know if you're watching this. My question to you is: are you badass enough to be an asset?
How often do you contribute on Patreon? How often do you write?
More, and I promise you, I'm more and more. I actually certainly today on the paywall, I launched my first. I've taken a new endeavor. I'm going to ask you your opinion about it, and then I'm going to put it onto. I've got a podcast. Again, these are just free things, so they're short windows, and like I'm going to offer a condensed version. So, you know, free and not free. But I'm launching. Look, I'm getting nervous to talk about it. But today I have launched acid meditation. I am embarking on a promise to deliver at least 3 meditation podcasts a week for traders, for anyone intrigued by it.
Go on. What do you mean meditation podcast? What do you mean by that?
You know, so it's
like actually meditating?
Yeah, it's the format is between 3 and 5 minutes of quirky observation about life or what's happening in markets, followed by a process of relaxation. You know, so my first one is about complexity. And complexity, it feels like a word that's so far removed from me, but I try and bring people to understand that not only is the world becoming deeper and more richly complex, but we're complex. You know, the gray matter in our minds, the cerebral cortex has got 20 billion neurons. It's just like all the time. It's the most complex creature. And when complex crafts co-join, magic happens. Yeah, there are numerous. When I tell my life story, there are numerous instances of what can only be described as serendipity. Yeah, like odd things that made a difference.
Yeah.
But I actually, so I try and muse on that, and I actually say, it's all about trying to overcome. It's not the death of ego, but it's being open. And like I say, like the first thing I want to is you've got your prejudicial. It's being open and having the courage, like not just to be the other guy. I am clearly not that other guy. So I'm trying to give people. I'm saying, look, if you put something back into that environment, the energy again, discharge that comes your way. Why? I mean, I've had lots of positive energy in my world. So we do that, and then it literally is 10 minutes. And what you do with meditation is you talk, and then you've got like a 20, 30-second pause. And then you engage again. And then it's like a minute of pause. So it's longer and longer moments of silence. And at some point, you don't make it to the end. You're just like, it trains the mind. Boom. So it's the opportunity to do 3 to 5 minutes of monologue on a polemic, that resonates with my passion. And then hopefully I can get it eventually out every day. So I'm on all the podcast platforms. Look out for that. Acid meditation.
I will, dude. I'll tell you right now. Are you trying to target people in finance? Because I think that is a nice demographic to target.
Yeah, exactly.
These boys needs to slow the brain down a little bit and learn to chill out.
Yeah, I'm trying to make finance rock and roll.
I like it, man. Tell me this. When's the last time you stressed out? Was it this decade? Like, you don't seem like a guy who stresses out.
Yeah.
You living the life? Is St. Bart's just that good? Your heart rate's that low? You just relax? Nothing bugs you anymore?
If you speak to my buddies, I am the most, like we were saying, having zero tolerance for error and incompetence. I'm a high wire act. So I got to kind of come down because I'm like, I'm here and I'm there. Just now, I'm actually hating St. Bart's presently. Hating it.
Really?
I mean, first of all, on record, I hate the Caribbean. It's a shithole. Okay. But
really?
St. Bart's is not the Caribbean. Okay. I would never consciously choose the Caribbean. It's a shithole. Forgive me if you like it, but it's a shithole.
What? Why do you say that?
Sketchy, high crime, really poor architecture, bad infrastructure, taxes, again, crime, St. Bart's is Saint-Tropez. It's an adjunct of Europe. You've got your passport, there's no crime, you don't lock the house. There are
hanging out with a bunch of billionaires, basically.
Yeah, and it's a bit like, like this, I was in the bar at Eden Rock. There's a kid reading Ayn Rand, Atlas Shrugged. I'm like,
nice.
I give him a little shoulder massage. And St. Bart's is like that. Like, all through the year, we get this. It's like a private members club, and you get, obviously, the richest, but you get some of the greatest minds, and they're chilling, and you talk.
Yeah.
Some of the people I've met here are astonishing. But stress, I ordered myself this beautiful, I built a beautiful new Defender, that British Jeep.
Yeah, I got one as well. I love those.
My old one died on me, and so a 110, so really long. I pushed the axle up, and I got big fat tires. It says Acid Capitalist on the front.
Love it. Well done.
Beautiful car. And
what color did you get?
Matte black.
Same. I got the black and I got it matted. Yeah. Love it, man. Love it. It's a great ride.
Guess where my damn car is? It's in St. Bart's, but it's impounded at the port. They refused me a permit to drive.
Why do you need a permit to drive?
Well, you
talking about a driver's license?
It's coming in from outside the EU. It's coming in from London, but it has the British, roadworthiness test. Yeah. Yeah.
Okay.
And I'm like, well, we'll get one done on the island. Give me the permit. And they're like, no. And I'm like, why? And the real answer is because we can say no. Petite bureaucrats, and they see me and they're like, you know what? I can kind of bust you. And I knew this was coming, so I never got involved. I can rub people up the wrong way. I sent a lovely, charming French kid. But my ruse was called. So I I've got lawyers. I'm $150 a day sitting in the port. They're charging me. And I'm like, you can imagine, I am desperate to drive.
To drive it. Yeah.
So that's why I've got to do meditation.
I'm going to be listening, man. I'm glad you're doing something
let
like
me
that.
know. Give me, and anyone else.
I will.
Let me know. Hey, I'm here for disdain. Nothing really. The great superpower that I have just now, or the great luxury, it's not this house, it's not wealth. It's, I can't, are you listening? I can't be shamed. I literally can't be shamed.
That is a superpower.
I'm the asshole.
Not being embarrassed ever is a superpower. So last thing, just before we go, I know I've said this a few times, but why, you've obviously done well, you're living a great life. Why are you still playing in the markets?
It's second time round on my terms. It's a wonderful question. Thank you for that. So I alluded to the past. Again, 12. We're time travelers. We kept going back in time. And I said to you at my zenith, I was managing about $1.5 billion. To get there, because that wasn't a function of my returns in 2008. I had about 80% of my assets redeemed from me. That was a function of conforming. Someone came to me and they said, do you want to manage a yard of money? I'm like, yeah, I would actually. And they're like, well, we can make it happen, but it'll be painful. And let me tell you what it will entail. And I'm going to ask you the question again. And it was kind of like the frontal lobotomy. It was like haircut. You're not on TV. There were no podcasts back then, but you're not on TV. You got to wear a suit. You got to fire 80% of your team and rehire with experts. And you got to, like, all that money you made in 2008, you got to spend every penny. And we got to have a $1 billion manager. You got to have the infrastructure of $1 billion manager today, and you've only got 50 million. So that's an expense. So I did all that, and I managed $1.5 billion, and I was miserable. I had a year on antidepressants. Thankfully, I stopped it. It was miserable. So.
When you say miserable, what can you attribute the misery to?
I'm a creative spirit. I was talking to you about complexity and serendipity, the magic carpet. Why do this? Finance, deservedly, it's got a bad rap with society. It's like golf. Misogynistic, really, really bad dress conduct, the things people wear, and very kind of lit. It's all straight lines. Yeah, it's all a pretense. We're actually trying to see the future, and the people that see the future are artists. If you look at Stanley Kubrick in Space Odyssey, what he saw from the future and captured so many years ago. Music, there's songs from the Beatles talking about gold confiscation. I must send you, I came across a punk band, American punk band, and they've got a song called Currency. You will love it. It's all about
you gotta send
currency going down, and it's like got a jam. So I played the game. I got the reward, but the reward was the lobotomy. There's a creature that lives in the seabed, a tunicate. It's a blob with one eye, and like in its youth, it's like it's like really happy, and it floats and it takes the nutrients, and then it finds like a densely rich. This is my meditation class for maybe Wednesday, so it's a sneak preview. But the tunicate is like, I like it here, and it goes boom, and it goes head first, and it drills itself into the seabed, and it stays there the rest of its life. And it does something which is so preposterous, it's really quite funny. It eats its brain. Yeah.
What?
Yeah, because it's got to live. It needs nutrients. It's got nutrients, but it's got to supplant it, right? But the point is, if you're not moving, or the question rather is, if you're not moving, do you need a brain? Because the tunicate doesn't need it. Plants are rooted to the spot. They don't have brains. And the analogy there is, if you're not trading, Like you're like, oh, fiat, hyperinflation. I'm a hodler for gold, silver, and mining stocks. I'm never selling, right? You're a communicator. You'd be better eating your brain. You are eating your brain, So boom, boom, boom. So doing this stuff fills my the challenge. We were talking philosophically about the objective of each day, which arises, and you're effectively presented with like those old French jam jars, those lovely kind of like
yeah.
And there are only two things that can go into your jam jar: those beautiful white pebbles and sand. And the challenge is to have more pebbles and less sand. The pebbles are the dopamine gifts, like someone smiles, you hold a door, like
experiences,
and that's a pebble. You're like, oh, a great song that made you like double check something, So anyway, I'm saying too much. I'm gonna let you go.
No, you're not, Hugh. That is awesome, man. It's been an absolute pleasure, Hugh. I do very much appreciate you coming on the pod today. So thanks, man.
Wonderful. Thank you.